So I've been talking about this quite a bit more lately, especially the last couple weeks, maybe give or take the last month or so. And this is just from what I've been noticing with my own observations and price action for quite a bit now, and I'll show you guys this on the charts. I've been talking about this divergence between the copper price and the silver price. So in the past, there was more of a positive correlation between the copper price and the silver price. And what I mean by positive correlation is when the copper price went up, the silver price went up in the past. Same thing when the copper price went down, the silver price went down, and vice versa. Now, the exact amounts up and down were not always the same, but these things were normally generally correlated positively because silver has a large industrial component. I believe at least half of annual demand for physical silver is from industrial. So let me show you this over I have a 5-year spot price chart of copper. It was pretty high, and then it crashed up until around late 2015, early 2016. It obviously had some bear market rallies during that time, and then it bounced back strongly. It tested the breakout, and then it just took off in end of 2016, and throughout 2017, it's been making higher lows and higher highs back again. So I would say basically it looks like on this chart that the bear market in copper may be over, shockingly, which given the fundamentals of the global economy, this is surprising. So let's look at the 5-year chart now of silver. Silver has a similar story to copper. It crashed briefly. There was a big rally. And then 5 years of paper bear market from 2012, almost about 5 years, down correction. And then briefly it had a rally around when copper did, except the rally, it never sustained the rally like copper. And it's been going back down since. And so from looking at, charts, it looks like towards the end of 2016 that there was the divergence grew between the correlation of copper and silver, and it's only expanded even more in 2017 to the point now where basically copper can go up and have really large rallies, as you can see on this chart here. And the silver price, I'll pull up the Kitco chart, is basically stuck in the mud and in trading range and can't really do anything. And so my theory, my hypothesis, and I call this manipulation arbitrage, and so I don't know if the central banks are doing this intentionally, if the bullion banks are the ones doing this, but they are certainly benefiting from this, and let me explain why very, very briefly. So if the copper price is high and it doesn't stay low, that prevents a lot of marginal copper mines from either shutting down, reducing production, or going out of business. And if the copper price rallies enough, like this here on this chart, this means that now a lot of additional marginal copper mines could get funded. So there's, new marginal copper mines that had not been able to raise the capital for many years that mining companies knew existed that over $3 a pound copper, that these things are now economic again. And so if you're a bullion bank and you need to manage the physical silver supply, it's not black and white where you want to bankrupt every single miner. You don't want to do that. You want to manage the paper prices and prevent a paper breakout, but you also need the physical supply of silver, especially for end industrial users. So I think what has happened, and this is, I think there's price evidence of this with the correlation has decreased, the positive correlation between copper and silver has decreased, and the divergence between the copper price and the silver price being correlated has only increased since late 2016 and increased even further since 2017. I think the bullion banks, where they have, it could potentially be over 100 million ounces per year in additional silver byproduct that could have potentially either come off the market or new potential copper mines with silver byproduct. And I've mentioned this in the past in interviews, whether it was on my SD Metals and Market Report interview a couple weeks ago, or on my X22 Report interview, or in interviews on my channel, if you're a copper or base metal miner and you have a lot of silver byproduct, you're far more likely to hedge the silver price or give it to the bankers and not really care about the physical silver, because the market is not going to give you a lot of credit for it. What do you guys think about this? What do you think about my my theory here, my hypothesis? What do you think here? Do you think then that the bullion banks are doing it intentional? Do you think the Chinese government is doing it? Do you think the private sector Chinese is doing it? Do you think the central banks and bullion banks are doing this? Because I think it's pretty evident now that with this higher copper price, you know, preventing the copper price from staying down at these levels here that I'm moving the mouse over on my chart, if they would have stayed down there, you would have had a lot of copper miners go bankrupt. You would have had a lot of base metal miners shut down with a lot of silver byproduct. And silver byproduct in the annual silver supply, it accounts for double the amount of primary silver miner. You know, I've done plenty of videos in the past where if the silver price had gone low enough, you know, if it had gone below $15 an ounce and stayed there, around 30 million ounces of silver for every dollar were potentially in jeopardy from primary silver miners. But the real amount of physical supply of silver that's important is the silver byproduct from the base metal miners, from your copper, your iron ore, your lead and zinc miners. So that's the main source of annual supply of silver. Who do you think is moving the copper price higher? I think, you know, there was a bear market rally, but I don't think fundamentals are really justifying this copper price higher. So what do you guys think about this? What do you think of my theory? There's a big divergence now between the copper spot price and the silver price. Their positive correlation that was true in the past is basically done. Wall Street for Main Street needs your help. Since the middle of 2016, YouTube continues to increasingly censor and sabotage the growth and success of my channel with dramatically slower or no subscriber growth, a huge decrease in views per month compared to 2016, and well over $10,000 lost in Google AdSense revenues the last 18 months. I should have been way over 20,000 subscribers and way over 3 million views last year, but it feels like I am Sisyphus trying to roll a heavier boulder with more and more additional weight up a steeper and steeper hill. In the last few weeks, all of my videos have been set to demonetization by default, and I have to manually protest each video. This is in addition to even lower than usual Google AdSense revenues after the adpocalypse started over a year ago for me. This has also affected my ability to get paid advertisers to agree to deals not involving YouTube, as I lost $3,000 per month in paid advertising deals at the end of June 2017 because all my analytics are down a lot thanks to YouTube censorship algorithms that have intentionally kneecapped the growth of my channel. With YouTube/Google/Alphabet /Don't Be Evil strongly considering demonetizing or setting all libertarian, conservative, or pro-Trump content to private to prevent any sharing or monetization, it is imperative I have a contingency plan to figure out how to make a living off my content. Each 30 to 40 minute video takes a few hours of my time before it's released to the public. There's a strong possibility that in the near future, YouTube will force me to move all or almost all my content to a new video upload website that allows free speech or behind a paywall on my own website. Thanks if you have already made a one-time or recurring monthly donation, and thanks in advance for any future donations as I decide the future of my channel and what to do with my content going forward. We accept one-time donations on the Wall Street for Main Street website via PayPal, Bitcoin, or Gold Money. You can also become a monthly Patreon contributor for $1 or more a month if you want to help me out. And don't forget to like each video on YouTube and share it with your friends and family if you think they would like the content.